Hey guys, it's Mahel here, and today I'm going to be talking to you about financing a car for the first time in the UK and giving you my ultimate guide on this. In this video I'm going to be talking to you about the types of finance available, the process itself, things to look out for, what happens if your car is involved in an accident, and more. But before we get into the video, if you're new here or if you haven't already, then make sure you click the subscribe button and click the bell to turn all post notifications on so that you don't miss out on a single video as soon as it goes live. And now, without further ado, let's get into the video. The first thing you might be wondering is, should I finance a car? And here are some reasons why you should. 1. You're able to pay over a period that you choose, for example over 36 months or 48 months, rather than paying for the car outright in one go at the start. 2. Having a finance agreement and making payments on time can help build your credit score in the long term. 3. Depending on the type of finance agreement you go for, you may be able to hand the car back at the end, which is great if right now you know that you're only going to be keeping the car for a few years. And 4. Some lenders won't require a deposit, meaning you're able to purchase a car with no deposit and you won't make your first payment until 1 month after you've purchased the car. Here are some reasons why you shouldn't finance a car. Financing a car comes with paying interest, and if you have a terrible credit score, you're going to be given a high APR on your deal, meaning you're going to be paying thousands of pounds of interest. For the duration of the credit agreement, whilst your name will be on the V5 of the car, the lender will own the car, and in certain circumstances they can take it back as well. If the car is involved in an accident, and especially if it's written off, then depending on your lender, this can create a massive headache. Taking a finance agreement out may hurt your credit score in the short term, as it will require hard searches to be conducted. Once you have your agreement as well, you'll also be deemed a bigger risk due to the amount of money that you're going to be borrowing. If you go for a finance agreement option where you own the car at the end and you decide to sell it, it's extremely difficult to get as much money back as you would have if you had bought the car outright. And lastly, your agreement will have a predetermined mileage limit, meaning if you exceed this, you'll be paying per mile as an extra cost. Now, when financing a car for the first time in the UK, there are various finance options available, and the best one ultimately depends on the age of the car. Here are some of them as follows. Leasing. In simplified terms, you're basically borrowing the car and you hand it back at the end of the agreement, or in some cases, depending on the lender, you may be able to part exchange this for another lease agreement. PCP. Here you're paying a monthly fee, and at the end of the agreement, you can either hand the car back or pay a balloon payment to outright own the car. PCP is usually only available on cars that are up to 5 years old. Hire purchase, also known as HP. Here again, you're paying a monthly fee. This is typically more than PCP, as you're not going to be paying a balloon fee at the end. However, you won't own the car until you make the option to purchase fee. This is typically £1 plus an admin fee of about £25. Let's talk about some of the finance types that I've had experience with, and we're going to start with PCP. PCP is a great option if you're in the position of not knowing whether you want to keep the car at the end of the agreement, but still having that option there just in case. It's also great if you want to keep your monthly payments lower, as you may be in a better financial position in 4 years' time to pay a balloon fee rather than incorporating that fee into monthly payments as you go along. Thanks to a PCP agreement, I, at the age of 23 and fresh out of university, was able to drive a 2018 Mercedes A200D AMG Line Premium Plus. This was at a very manageable price and also didn't require a deposit. Although both PCP and HP were available on this car, I went for PCP. The reason being is because whilst it's a nice car, I was unsure if I wanted to keep it at the end. After all, at the end of the agreement, I would have been 27, and so I didn't know if a 27-year-old Mahel wanted to be driving a Mercedes A-Class. But at the same time, that option was there. If I wanted to purchase it at the end, whether it be for myself or to pass it on to someone else, the option was there, and that's why PCP was great for that car. However, one mistake that I made was getting the finance sorted directly through the dealer that I bought the car from, and I'm going to be talking more about that later. You might also be wondering why I'm talking in past tense, and that's because I crashed that Mercedes. However, I'm going to be speaking more on that later when I talk about what happens when you crash a finance car. I'm now going to be talking about hire purchase, which is what I currently have on a 2017 Ford Focus Titanium X. As the car is technically 6 years old, hire purchase was the only option available on this. PCP wasn't available. Similar to the Mercedes, this is on a 48-month agreement. However, because it's hire purchase, I can execute a £1 fee to purchase the car at the end, which is what I'll be doing, and probably about £30 in admin fees, versus on the Mercedes, which was PCP, I would have had to pay, I think, in the region of £8,000 to keep the car in the end. Now you might be wondering what happens during the car purchase process when using finance, and this is something I'm going to explain now. First things first, just because the dealership doesn't offer finance themselves or have their own broker, it doesn't mean that you can't source your own. And similarly, just because a dealership has their own finance provider or broker that they usually go for and offer to customers, it doesn't mean that you can't source your own. Some dealerships may use tactics to get you to use their own broker to get finance on that car, and they may even outright refuse to work with other brokers. Believe me, don't fall for this. The reason that they're doing this is because when they use their own broker and commission a sale from that, they are, getting commission from that sale. They are legally required to tell you this, however, from my experience, they don't always do this. So just be wary, make sure that you know you have the right to use your own broker, and if the dealership is trying to stop this, then make sure you go ahead and buy from another dealership, no matter how lucrative that car seems. Now here's a basic outline of purchasing a car using finance. You find a car that you like, you call the dealership, you say you want to arrange a booking and that you would be looking to purchase it on finance. Between the call and the viewing, you carry out a pre-credit check to see how likely it is that you'd get finance on that car. If the pre-credit check comes back well, you'll be given a ballpark figure of how much you'll be paying monthly, how much the total repayments will be, and the APR. Do note, however, this won't be definitive until you've carried out a hard credit search, which will give a better indication as to what the lender or broker can offer you. And similarly, if a dealership says something like, we can offer as low as 6.9% APR representative, believe me, that doesn't mean that you're going to get 6.9%. You could, for example, get 16%. It's dependent on your own circumstances. If you go view the car and everything checks out, you usually place a dealership deposit down to take the car off sale. This is usually deducted from the total price of the car once you make the purchase. You then fill out a full credit application through the dealership's broker or through your own. If using your own broker, you'll receive a call asking what the car is, who the dealership is, and then they'll confirm to you whether or not they can work with that dealership. When I was going and getting my Ford Focus, some brokers were like, nope, we can't work with the dealership that you're trying to purchase a car from. However, other brokers were like, yep, we've found some lenders who are willing to purchase that car for you and then work with you on that finance agreement. The broker will also highlight the best APR rates available, as well as the monthly repayments, and I'll tell you everything that you need to know. If you don't know something or you have a question, don't be afraid to ask it. Assuming everything checks out, you can confirm to proceed, and it will usually take a couple of days for the lender to pay out to the dealership. And once the dealership receives payment from the lender and also admin fees from yourself, you're free to take the car away. It really is as simple as that. I mean, yes, using finance can take a few days more than it would if you were to buy the car outright using cash. However, it is still a simple process. Now, here are some things to look out for when considering financing your car for the first time. Don't agree to a high APR deal, no matter how much you want that car. If you really want that Mercedes, but it means financing at 19% APR, which is very high by the way, then don't do it. Instead, buy a car that you can afford outright, or alternatively, build up your credit profile and wait to finance a car at a better APR rate. Always make sure you read your contract before you sign it. This is to check things like mileage figures, monthly repayments, total repayments, and other figures are correct, because sometimes there can be errors that are made. For example, with my finance agreement on my Focus, I had to sign the contract twice because the first time they got the mileage wrong on the contract, which was, I don't know, not my fault, but it just goes to show that errors can be made. Even if the dealership's broker is offering a good APR rate, make sure you use your own broker to see if you can get an even better one. Something I didn't do but I would recommend is to try and negotiate the price of the car before mentioning that you want to purchase it on finance. Once you say to them, I want to purchase this car on finance, your room to haggle basically goes away. And lastly, before agreeing to purchase the car, make sure it gets a fresh service and MOT. If something goes wrong with that car, it will be a pain to sort it out with both the dealership and your lender. Now you might be wondering what happens if your financed car is involved in an accident or written off. If it's involved in an accident but it's not written off, however, it's categorized as Cat N or Cat S, chances are your finance provider will not take the car back and will make you purchase it with a lump sum. If it's involved in a minor accident and it isn't categorized and it is repaired to manufacturer standard, chances are everything will be fine there. And if the car is written off like my Mercedes was, you'll have to tell your finance provider this and then they'll give you a settlement figure. Luckily, the finance provider on this car were quite nice with the process and were quite relaxed in how urgent it was to get the money, and they knew that it would take months to receive the insurance payout, and overall the process took about 2 months to sort it out with my gap insurance and also my insurance provider, and they were quite happy with this. They weren't pressuring me saying we need that settlement figure right now or you're going to, for example, have action taken against you. They knew that it was going to be a time-consuming process and were quite relaxed about it. I did just briefly mention gap insurance, and I would highly recommend taking out combined gap insurance if you're going to be financing a car. This is because if your car is written off, it will provide the difference between the insurance settlement and what is owed on the finance agreement. I'm not going to make any recommendations for gap insurance right now, as I am searching for a new one for my Focus. The one on my Mercedes, whilst they did pay out, it was they were a pain to deal with, let's just say. So I would recommend having gap insurance. Who you want to go with, however, that is completely up to you. And I think that basically covers everything you need to know about financing your car for the first time in the UK. If you did enjoy this video or if you found it informative, then make sure to leave a like, comment below what you thought, and also click the subscribe button if you haven't already. Make sure to follow me on social media, that's at Mehel Khan on Instagram, Snapchat and TikTok, at MehelX on Twitter, and official Mehel Khan on Facebook. Let me know as well if you want to see more videos like this from me. This is a bit different to what I usually make, but I do want to kind of cover more finance related videos, being a business graduate myself. And also I know this is relevant to people of my age, as when they're getting into their first professional job, they will be looking at getting a nicer car, whether it is like the Mercedes that I had or even the Focus that I have now. But that is going to be it for the video, guys and girls. I hope you did enjoy it. I've been Mehel, and I will see you in the next one. Peace.